Hello, YouTube. The S&P is moving up in dramatic fashion today, or oh my goodness, how high can we go from here? We're right back to our bear threshold, which we've talked about for many days now, and we actually pushed off of it. So we came back down. Looks like it was a bit of a trap, and now we're actually pushing off. And the S&P is up by 1.7%, and the NASDAQ is up by 2.65%. We look to our heat map today, and it is the tech stocks leading the charge. Apple did a 187 on the market. Microsoft's up by 4, Google 4, Amazon 4, NVIDIA 6, Meta 4. We have strong leadership among tech today. We had some news from the ECB, but I want to leave you with a few charts here to try to tell a little bit of a story, because I think that when we look at the chart, there's a few things we can look at. We can look at the price. We can look at the volume. But here's a different tool that I think might be useful right now. It's called the volume profile. So we're going to slap that in here. And I just want to reflect on where we are from our bear market start to where we are now. This is different than an anchored VWAP. This is just going to show us the volume relative to the price instead of relative to time. Because when we look at the volume price over here, it's telling us relative to the day that it transacted. But when we look at the price volume profile over here, what it tells us is from this moment in time, basically our all-time high beginning at the end of 2022 to where we are now, we can note there's some pretty big bars here. Yep, those are big bars. And where are we right now? Well, we're in the thickest one. We look here to the median, which is going to be here at 394.81. And I can understand why we need so much volume to really go nowhere. Down, right back up, retracing most of the move. It means we're chewing through the supply and demand. And that's what it really comes down to. So if we can clear the 50 DMA, it starts to get a lot easier for us to go up to this next pocket and back above 417, which is where we birth the new bull market. That's where we can go a lot higher. And if we remove the graph now, we look at QQQ. Oh my goodness, did you see the move on this one today? We got a W inside of here now. It could go all the way back up to the roughly 315 area. But what's really important to me, or crucial, is just the size of the power up. We have all this constructive volume, as we've noted before, and we'll look at the pattern in a moment for the price. But the volume here, right, mostly green as we're flattening out, and then we have like a mountain building up here, volume higher, higher, and it's pretty dominantly green. It looks pretty good. So when we look here, we're also above our 50 weekly check. That's here at roughly 294. We're like 12 points higher. That's a lot higher. Volume's elevated. And the most important part is that we also have a golden cross here, which is a lagging indicator of strong support. If we hide all the trend lines, we came down, we closed, let's actually go to full candles or hollow. We closed 1 day below the 50 and 200. Boom, the next session right back above on March 13th. That's notable. Why is that notable? It's a trap. Generally speaking, not that it's a guarantee, it's a rule of thumb. 2 sessions above or below an average signifies the potential for a trend change. So by getting only 1 below here, it looks like a false breakout. And I'm going to ask you one time, if you wouldn't mind, please and thank you, smashing that thumbs up and consider subscribing to the channel if you're enjoying the content. We put out videos every single day. All right, so one more to look at here, because I think that there's just so many things I would like to look at, but I really summarized it here in one tweet. So this is something that I was not able to actually find at all. This is the only time it's happened that I could find on QQQ. It's a triple engulfing candle. So we have 3 times weekly engulfing candles that are back to back. So we have to think about, what does this mean? Well, if we're truly at a turning point and we're actually going to go higher, this is what it would look like. There is a dramatic push-pull happening, which is why we get a megaphone. And if we now delete everything on the chart and just try to think about what this means, it means on every week, the bears get progressively more bearish, because that's why we're printing lower lows. And the bulls get progressively more bullish. That's why we're forming the higher highs. And to make this pattern extremely simple for you, if we think about last week's high, a bullish engulfing candle by definition is just when the previous range is engulfed or absorbed. But it is an optimal setup when it remains above the previous candle high. And right now for QQQ, that is at 304. So as long as we're above 304, the risk is that we could go higher. I think we're maxing out. I think we're going to need a back test. But as long as we're above that area, that's what I'm watching for. The double-edged sword with an engulfing candle is that if we fall back below 304 and close below there tomorrow, which is going to be Friday, that would be a false breakout. We would have broken out, but it's a false breakout, which could then turn into a weekly head and shoulders if we fall back below 304. Again, a lot of ifs. I understand that. But the most important thing about this triple engulfing pattern is that This is something we have not seen since the birth of this chart. And how long has that been? Why? Because by definition, okay, since 1999. So what this tells me is that a engulfing candle one time for me signifies that, again, we have bears are more bearish, bulls are more bullish. So as the range expands, whichever way we decide to go, it could have an oversized move higher. Just like if we decide to go to the downside and we're below the lows, it could have an oversized move lower. So that didn't just happen one time, but it happened 3 times in a row, which means that people who are managing large sums of money managers, market makers, right, portfolio managers, yada, yada. What they're looking at is, okay, well, I'm trying to deploy money in a safe way that's predictable for the future. Well, we heard about the SIFIs yesterday, the systemically important financial institutions, and it looks like there were a lot of them were going to have a problem. Well, someone stepped in and said, you know what, we're gonna fix it. So that's what the psychology of the triple engulfing pattern means for me. And because it's not happened since 1999, this is a first. We have not seen back-to-back engulfing this much, and in QQQ still leading. So let's look at S&P and note that it's a failed breakdown. That's all it's got. It's right here at the 50 weekly. As of the close, we're within $1. So if we get above 397 tomorrow, well, man, that's like pretty strong volume building up here. Yep. Over the short-term price, short-term maybe bullish. We would have to get back above 408, 409 to really confirm it. And on that volume profile I showed before, we got to get up here about 417, 420. We have to birth a new bull market. So what does this mean, Justin? Because you're confusing me a little bit. Let's go back here to our weekly chart. What it tells me is that QQQ is what people perceive to be relatively safe. That's why in times of uncertainty, they're flocking to QQQ. It's why it's at the high of the week. It's why it engulfed last week's candle. Whatever happened, people said, you know what, reaction to the news, I want to own tech. And tech is only, again, this is the not technically the NASDAQ 100, but we're looking at 100 tech stocks. So tech stocks are bullish. People think they're safe. When we looked at the S&P, there's 500 stocks inside of here, including banks, including insurance, all that good jazz. So what that means is that we are less bearish than last week because we're green on the week, but we're not as bullish as people were at peak last week before we heard about the bad news. That's why it's going to be a battle for us to get back up to here. And if we do, again, I have a few more slides I want to go through here, and then I think that I'm going to leave some more for tomorrow because I think the story is pretty complicated. It's moving fast. Let's find about 2 minutes going through the news and see if there's anything else for us to go through at the end. Initial jobless claims came in green. That should have been interpreted bearish. All right. And then we have the ECB coming in line. So what this means for me is that she basically told us that there are 2 things which are at risk here. Here we go. Here's what I heard from Christine Lagarde. She basically said there's 2 battles right now. There's a battle for the financial system and a battle for inflation. And she's saying, hey, I got the tools for both. I disagree. What Jeff Gumlock said before is that these tools the Fed is doing called liquidity, it's going to reverse course. It's actually going to be inflationary. So they're saying they got the tools for both. Market is thrilled. It is euphoric. I am not so sure. And I think what I heard from her today is that she wants optionality. If she would have also done less than what was anticipated, people would have perceived that as saying, well, if you're not able to hike by as much as what you told us only like a week ago, it means you perceive there to be more risk. If you, the central banker, perceive there to be more risk, it means you didn't do your job. You didn't plug the holes. You didn't make sure the leaky ship is not going to sink. That's how I interpret it. So they had to do what they were going to. Well, what have we heard about Jerome? Well, he's got to do 25. So the question is whether or not it's going to be a hawkish 25 or a bullish, hawkish or dovish, which just means, is he going to say we're going to keep going up more higher for longer or whatever? And that's important because we have a Fed calendar coming in. We also have the SCP coming in. All right, so here we go. Pain trade is up, but the fundamentals say down. So the ECB and the Fed won't be our friend. That's what I heard today. I might have heard it wrong, but that's what I heard. So we likely still need the fade, but the pain trade right now is up. Why is the pain trade up? Man, triple bankaphone. We got OPEX tomorrow. And this is the takeaway that I tried to get to before, but here's it in 9 words, sorry. QQQ is in advanced mode. It's in a weekly bullish engulfing candle over the previous monthly candle high. SPY is in defense mode. S&P is just trying to recoup previous gains. It's green, but it's not above the short-term price. It is not above last week's high. It's making progress. It is defending. It is not advancing. QQQ is advancing. We look here to the volume profile as well. And here I'm looking at a specific range in time. I'm looking to the time that this big short position was really initiated going into like late June into July. And this is when the net speculators flipped to being net short the S&P 500. So this is a protracted long period of shortness. It is the shortest we've been since 2020 at the extreme. And then we look here to an extended period, but there's also a massive cover in here. There's not really a massive cover in here. It's never really dipped below 200K shares, 200,000 contracts, sorry. So what does that tell you? Well, it tells you if we can figure out, okay, the S&P 500 on the E-mini futures or ES1, we go back to that time, roughly late June, and we look at the volume profile like we did in the one-day chart. It gives us some clear levels here. It's 39.80 to roughly 40.20. So if we can get above the ES one-day, 50-day moving average, it means we're bullish. We're above the previous demand zone here. We can probably advance to about 4,100 or higher. We can birth a new bull market, maybe even hold it. But if we can't, we got to be ready for another fade. At what point? Well, inside this pocket. So between let's just go back here to our one-day chart, and we're looking at ES. So let's add that volume profile back in and add some context now. So volume profile, okay. So as we see here, we're going back to our all-time high. We have a big pocket to chew through here. So I have a red resistance line that pretty much aligns with the two. 39.64 is going to be the median price. If we zoom in here to June, July, here we're looking at early June. So I'm really just going to go from when everyone said, oh my God, short the market. These big fat bars here. If you look at there, okay, here's our big pocket. So if we can get above the 50 DMA, currently at about 40.20, I think it could be easier for us to go back up. We'd also be reclaiming our daily uptrend. And that's also what I look at for direction. Again, the saying is that you don't want to fight the trend. The trend is your friend. So for me, this is like a very clear picture. And as we're going into tomorrow, which is going to be the last day of the week, if you want to have more context in regards to what I talked about going into this week, actually, do I have anything else to go through? Now, we got the Fed meeting on March 22nd, and that's when they're going to provide the SCP. So whatever we heard from Christine Lagarde today, I think we're getting as a read-through to what we're going to hear from Jerome Powell next week. And if what he says is what we heard and the SCP gives us another reaction, we just have to be mindful of it. So again, that video should now be queued up over here on the left-hand side. If not, I look forward to seeing you tomorrow. Happy Thursday, and let's make sure we end the week on a high note. Thank you again.